Chapter 18. Taxes affecting real estate. Constructive notice. On January 1st, tax year begins. Property is assessed, lien attached, tax exemption filing period begins. March 1st, tax exemption filing period ends. April 1st, property taxes for previous year become delinquent. November 1st, property taxes are due for current year. December 31st, current tax year ends. Real property taxation process. Real estate taxes, commonly called property taxes, are based on the value of real property, hence the term ad valorem tax, which means according to value. Property taxes in Florida are levied on a calendar year basis. Taxes are paid in arrears at the end of the tax year for the beginning period January 1st through December 31st each year. Property taxes become a lien on all real estate on January 1st each year. Property taxes are levied against land and all improvements of the land. The assessed value of the land and improvements are arrived at separately and then combined to reflect a single assessed value. The state Supreme Court has interpreted Florida statutes as requiring that all real property be assessed at just value. Assessed value is the value of the property established on the property tax purposes. Current addresses are needed to ensure that owners receive a notice of change in assessment before the time allowed to protest has expired. Any property owner is entitled to protest a property assessment, but not every protest will be successful. Step 1. The first step is to seek an adjustment. Come here. Is to seek an adjustment by contacting the current property appraiser or a representative of that office. Step 2. If the property owner request for an adjustment is rejected, the owner may file an appeal petition with the Value Adjustment Board. Oh, quit playing. You see yourself on the camera, you're playing. Value Adjustment Board. Step 3. The final step available to property owner is to seek a change in access litigation in the courts. Every fiscal year, each tax district, city, county, school board, and special tax prepares an operating budget. Determine what is actually of several department budgets. With the budget in hand, the tax district knows just about what expenses to expect for the next year. With a reasonable estimate in hand of the revenue expected from all non-property tax sources, the tax district is able to predict the amount of money needed for property taxes. The amount of property taxes paid to a tax district must come from its tax base. Immune properties are city, county, state, and federal government properties. Exempt properties include properties belonging to churches and nonprofit organizations. Partially exempt property is subject to taxation, but the owner is partially relieved of the burden. For example, homestead property. Florida residents. Applicants must reside in the home to have legal title to the property as of January 1st to be eligible to file for homestead tax exemption. Homeowners are entitled to $25,000 homestead exemption for the assessed value of the home or for city, county, and school board taxes. Homeowners are entitled to an additional $25,000 exemption from city and county taxes, but not school board, on properties assessed between $50,000 and $75,000.